So, very good morning to students. Students, this is grade 11 AS level accounting session. Students, we already understand the concept of recording of transactions, where we understand the golden rules of accounting like real account rule, nominal account rule and the personal account rule. With the help of these rules, we have understand how to record the transactions. After recording of transaction, our prime rule is to classify the transactions into various ledger accounts. Each ledger account consists of multiple balances. For example, if I purchase goods, you already know the entry, the recording of transaction for purchase. If I made a purchase, cash purchase, I will make an entry of purchase account debit and cash account credit. So we have understand that the account purchase has a debit balance and the account cash has a credit balance. Similarly, if we have made a cash sales, we will pass an entry of cash account debit, sales account credit. That means in this transactions, we have a balance of cash debit and balance of sales credit. So in that manner, we will make all the accounts of each transaction. We have already understand the concept of duality. What is the concept of duality? The concept of duality suggests that every transaction has two aspects. One aspect is the debit side and another aspect is credit side. So every transaction gives a rise to two sides of accounting, that is debit and credit. As per the principle of duality, we understand that the credit side or the debit side will always match. The debit will always be equals to the credit side. This principle is known as principle of double entry or a double entry systems, isn't it? We have thoroughly understand this concept. Now our today's objective is to understand the concept of trial balance. So what is trial balance? First of all, we need to understand why this is known as trial balance. Students, we need to focus on the two words. First is trial and second is balance. Now understand the concept of trial balance. After making ledger postings, that is the ledger accounts, we will balance all the accounts. For example, if purchase account is debit, we have a debit balance of purchase account. If we have made a sales, we have a credit balance of all sales. If we have made an expenses, we have a debit balance of all expenses, because all losses and expenses will be debited as per the nominal rule of accounting, and all the income and gains, all the profit must have a credit balance. So we understand that every account has some balance. How we will make the balance? We will first prepare the ledger posting, and at the end we make an extract of balance of each account. For example, if we total all the purchases of whole year, we will get the debit balance. But if we made a purchase return, we will have a credit balance of that purchase return, because what goes out will be credit, what comes in will be debit. So we need to understand every account has its own balance. If it has a debit balance, it goes on debit side. If it has a credit balance, it will be go on credit side. Isn't it? Okay. After ledger posting, we will do the balancing of each ledger. So first we will record the transaction as per the golden rule of accounting. Second, we will classify the transaction as per ledger posting, and after posting the ledger accounts, we will extract the balances of all the accounts, and these two accounts can be have a debit balance as well as credit balance. If it has a debit balance, we will write the balance of that particular account on the debit side, and if it has a credit balance, we will write on the credit side. So students, now we shall understand the nature of the balances, the general nature of the balances. Please look at the chart. You can see I have written the general nature of balances. One side is debit side and another side is credit side. Sir, which type of account generally have a debit balance? Assets. Assets always have a debit balance, because it is the entity's control. It is in the entity's control. Plus, Why we are calling it as an assets? Because it derives the future economic benefit for me. For example, this board is an entity's assets because this board entity have control upon it, and we use this board for the business use, for the use of conducting classes. The air conditioner is also an entity's assets. Why? Because we have a control over it, and this is for the business use, and we will derive the future economic benefit. So two things we need to understand: the assets, the nature of assets. About the assets is it must have a control of the entity, and through this item or the assets, the entity will earn future economic benefits. The motor vehicle is an assets for an entity. The furnitures are the assets for an entity. The fans, the tube lights, the furnitures are the assets for an entity. Why? Because the entities has control over it, and it derives future economic benefits out of it. Okay. The second point is the expenses and losses. The expenses and losses will always have a debit balance. Why, sir? Because as per the nominal rule, all expenses and losses will be debited. So when we prepare the expenses ledger account, we will get the balance of debit. The total balance of expenses will always be the debit. And the the nature of losses will always be the debit. It is as per the nominal rule of accounting. Then comes the inventory, the purchase of goods. Sir, we have understand the real account rule. As per the real account rule, we understand what comes in will always have a debit. When we purchase the goods, the inventory comes in to the entity. Therefore, every purchases must have a debit balance. But if we have made a purchase return, we will have a credit balance because the inventory outflows from the entity. The goods outflow from the entity. So purchase will always have a debit balance, whereas the purchase return will always have a credit balance. So understand, students? And again you can see debit balance. There are three general rules: the assets, the expenses and losses, and the purchase of goods will always have a debit balance. Then comes to the credit balance. If assets is a debit balance, then liability will have a credit balance. What is liability? Liability means the payable. The payable. That is, a liability means everything which is not under the entity's control, or we need to pay someone in future. We need to pay someone in future. That means a payables. And probable outflow of resources. It is always probable. Probable means the chances of getting outflow of money is more. For example, if I purchase this marker on credit, what entry I will make? Purchase account debit. That means purchases of the goods will always debit, and no outflow of resources I have made. That is, I have not paid any amount. That means I will have to make a personal account credited with the person to whom I purchase the goods. For example, if I have a person called Mr. Jitu, if I purchase this marker from Mr. Jitu, what comes in? This marker, purchase account debit, but I have not paid anything to Mr. Jitu. So what entry I will make? Purchase account debit, Jitu account credit. That means Jitu is my payable. I have to pay Mr. Jitu in near future. Do you understand my point? Similarly, if I made a sales of goods to Mr. Jitu, what entry I will make? Jitu account debit, sales account credit. So we need to understand that a personal account may have a debit balance, may have a credit balance. If a personal balance is a debit balance, that means we have to receive, we will receive. If personal account is debit, it is an assets. If personal account is a credit balance, it's a liability because we need to pay, Do you get it? Do you get this point? Again, understand, if a personal account has a debit balance, it is an assets because it is a trade receivable. If personal account has a credit balance, that means it is a liability because we need to pay in future. It is a payable, and there is a probable outflow of resources. Resources means money. Do you get my point? Then income and gains. What is income and gains? Sir, as per rule of nominal account, all income and gains will be credited. All income and gains will be credited. So the income and gains always have a credit balance. For example, if I received a discount, it is a gain for me, it is an income for me, always credit. But if I allowed the discount, it is an expense for me, always have a debit balance. If I pay a salary to my staff, it is an expense to me, always debit. But if I earned an interest income, it will always credit because it is an inflow of resources. Next point, the sales of goods. But sales of goods will always having a credit balance. Why? Because there will always be an outflow of goods. Outflow of goods. As per real account rule, what goes out will always credited. So we shall understand the crux, the conclusion of the concept is that generally these three accounts will be having a debit balance and these three accounts will always a credit balance. Now we need to understand what are the example of assets. So students, we have understand the general nature of balances. Now we will understand what is assets, what is liability, what is expenditure, what is income, what is purchases and what is sales. Now understand students, assets are categorized into two parts, non-current assets and current assets. I am again highlighting, this is non-current assets and these are current assets. If I can conclude, non-current assets are again categorized into two parts. One is tangible fixed assets and another is intangible fixed assets. What is tangible fixed assets? If it is a mobile and if I can touch it, feel it, it is an tangible assets. What is intangible assets? The assets which exist but we cannot see it, we cannot touch it, but it exists. For example, the brand, the goodwill, the franchisee, the license, all are intangible assets which help a business to run and to grow. But we cannot see it. That's why they are called as intangible assets. So the non-current assets are categorized into two parts. Again, tangible fixed assets and intangible fixed assets. Examples of tangible assets are the plant, machinery, furniture, fixtures, motor vehicle and so on. All the assets which are under entities control of which we can touch and see it are all tangible assets. But those assets which we cannot see or we cannot touch it but it exists are known as intangible assets. Tangible assets and intangible assets both are called as non-current assets. Student, you should make this chart because there is separate chapter on this topic itself called as non-current assets. There is another chapter on the same line is depreciation. We always charge depreciation on non-current assets and not on current assets. Now, we will understand the concept of current assets. What are current assets? So, current assets means an assets which are not non-current assets. Means the assets which is flowing in the business, and generate the income, generate the money. For example, if I am a trader of a marker, this marker is an assets, that is an inventory for me. This is not a fixed assets. This is not for business use. This is for resale. That's why it is known as current assets. The debtors, the trade receivables are my current assets because I will receive something for which I have sold the goods to him. These are the current assets that can easily convert it into money or which will be converted into money in the near future. So assets are categorized into two parts, non-current assets and current assets. Non-current assets are again categorized into two parts, the tangible fixed assets and intangible fixed assets. In trial balance, all assets will come under debit side. Then come the expenses and losses. Sir, where we will show the expenses and losses? First thing, it has a debit balance, but it is not shown under assets or liability side. It will be shown in income statement, which we will discuss in later on chapters. And then purchase of goods. Students, we need to understand when we purchase the goods, it has a debit balance, but ultimately it becomes part of the inventory and it will come under the current assets. For example, if I purchase 100 markers, so these 100 markers are my purchases. But if I can sell only 20 markers, then 20 markers are the goods sold, and the remaining 80 markers will become my current assets as an inventory. Do you understand the concept? If you do not understand, please repeat this line by reversing the video. Then comes the credit side. What is credit side? So liability always have a credit. Liability are again converted or divided into two parts, non-current liability and current liability. So what are non-current liabilities? Non-current liabilities are those liabilities which have a future outflow more than 1 year. For example, if I take a loan from bank for 5 years, so I need to repay the loan in the period of 5 years. It will become a non-current liability for me. Why non-current liability? Because it has a payable period more than 1 year. But if I take a loan for 6 months, it will be my current liability because I need to repay that loan within the time frame of less than 1 year. Then it will become a current liability. If I purchase this goods on credit, what entry we will make? Purchase account debit, creditor account credit, isn't it? Purchase account debit and creditor account credit. In our last example, if I purchase this marker from Mr. Jitu, what entry I will make? What recording of transaction I will make? Purchase account debit, Jitu account credit. So this purchases is my debit balances, but Mr. Jitu will be having a credit balance. Now, I will ask Mr. Jitu, when should I pay you the money? He said, sir, you shall give me the money within 1 month. Then Mr. Jitu will be my current liability. But if Mr. Jitu will say me, sir, pay me after 1 year, when will I, whether it is a current liability or non-current liability, so then it will come under non-current liability. Generally, the trade payables are the current liability only. Generally, the trade payables will always be a current liability. In trial balance, we need to understand that all liabilities will come under credit side. Do you understand my point? Then it comes the incomes. So income also have a credit balance because as per the nominal rule of accounting, all the income and gains will come under the credit side. And the last is the sales of goods. So we already understand. The sales of goods is nothing but outflow of the stock. What comes in should be debit, that is purchases. What goes out will be credited, that is sales. Sales means sales come under the income statement, but the real nature of sales will always be credit. Now you should understand one more thing, the important thing. If purchase is of debit nature, then purchase return will be of credit nature. If sales is a credit nature, then sales return will be of debit nature. Do you understand my point? Do you understand my point? Okay. So students, now we have understand the nature of accounts, the general nature of accounting, which accounts generally have a debit balance and which account generally have a credit balance. Now we shall start with the work example number 1. I request you all to please take out this book of accounting which you have and the work example on page number 64. Take out work example number 1, page number 64. Okay, I hope you have all open page number 64. Now comes to page number 65. Now comes to page number 65 where it is written the continued. Please read this trial balance. Please read this trial balance. Page number 65. Please read it. Pause the video, read the example, and then we will start again. So student, I hope you have paused the video and read all the examples. Now we shall understand. So students, the first point is motor vehicle. Motor vehicle. Now understand what is the nature of motor vehicle. Motor vehicle is assets. What is the nature of assets? So debit. So the 25,000, the balance of motor vehicle 25,000 will be written under debit side. Do you understand this point? If you want to learn this concept, please pause this video, read all the points, try to figure out whether it is come under debit side or credit side. If you've done this, then play the video. So, motor vehicle comes under debit side because motor vehicle is a, don't write, but I am just giving an example. Motor vehicle is an assets. Do you understand? So the balance of motor vehicle, the balance of assets will always debit. Do you understand the point? Second, machinery. Machinery is also a assets. Yes, machinery is also a assets. Where should I write the amount? Debit or credit? So assets is always having a debit balance. So I should write it under the debit side. Are you getting my point or not? If you do not understand the concept, just see the previous chart. All assets have a debit balance. So we need to understand the nature of account. If it is an assets, we will write on the debit side. If it is an expense, we will write on the debit side. If it is a purchase, we will write on debit side. Simultaneously, if it is a liability, we will write on credit side. If it is an income, we will write on credit side. And if it is a sales, we will write on the credit side. Okay. So then comes the office furniture. So office furniture is an assets. Very good. Office furniture is an assets. So where should we write the assets? Where should we write the assets? On the debit side. What is the amount? So it is 8,000. Do you understand the point or not? Now you understand? Every assets will have a debit balance. Right? Then comes the sales. So sales is a outflow. All outflow should be credited as per real account rule. When we sold the goods outflow from the entity. Where I should return at debit side or credit side? At debit side or credit side? Sir, credit side. Because what goes out will always credit. What is the amount? It's 68,000. So we will write on the credit side. So we will put a dash on the credit side for the debit balances, and I will put a dash for the credit balance on the debit side. Then comes sales return. Sir, what is sales return? For example, if I sold this goods to Mr. Jitu, it will be my credit side. But if Mr. Jitu comes to me, sir, this is not applicable, this is not a good. Sir, take it return. So the goods again comes to me. It is an inflow. All inflows will be debit. Or you can also understand this thing. If sales is a credit, then sales return always have a debit balance. So this is nothing but inflow. And we already understand as per the real account rule, what comes in should be debited. What goes out should be credited. So student, the prima facie, the concept is of recording of transaction only. If we understand the recording of transactions carefully, we can understand all the together the various chapters of accounts. Do you understand? So I have also posted the rigor practices. Please do it, that rigor practices for more learning. Now, what is purchases? So purchases means inflow of resources. Purchases means the inflow of resources. So it is an inflow. So what balance of purchases? What balance of purchases? It's around it's 22,000. It's 22,000. So sorry, I skipped the sales return. Sales return. So sales is a credit, then sales return will be debit. Sales return is 1,000. Then we comes with the purchase return. So if purchase is having a debit balance, what balance will be having a purchase return? So it will always be a credit balance. Very good. If purchase, where is purchase? If purchase is a debit balance, then purchase return will always be our credit balance, because sir, purchase is a outflow. Purchase is a outflow. Where should I return? Where should I return? At the credit side. 2,000. Are you getting my point or not? Then comes trade receivable. So trade receivable means assets, because the other party will pay me in future. Sir, if personal account is debited, please understand this concept. If personal account is debited, it will always called as trade receivables, because if I sold this goods to Mr. Jitu, I will pass an recording of transaction. I will pass an entry, Mr. Jitu account debit, sales account credit. Now I have made a sales. So Mr. Jitu is my trade receivables. There will be an inflow of resources, and as per real accounting rule, inflow of resources will always debit balance. The trade receivable will always be having a debit balance. So the trade receivable is an future inflow. It is called as future inflow. आया नहीं है, आने वाला है. So if it would have come, it will come under inflow. But if it is a future inflow, it will be called as receivable. Are you getting my point or not? So trade receivable will always be having a debit balance. So what is the amount of trade receivable? Trade receivable is 6,400. So we will write under debit side 6,400. Are you getting my point or not? Now, trade payable. So trade payable means, if trade receivable is future inflow, trade payable means future outflow. For example, if I purchase goods from if I sales goods to Mr. Jitu, if I sold goods to Mr. Jitu, what entry I will make? Mr. Jitu account debit, sales account debit, credit. So Mr. Jitu will become my trade receivable. If I purchase this goods from Mr. Jitu, what entry I will make? Purchase account debit. It will come under debit side of purchases. Mr. Jitu account credit. Mr. Jitu become my trade payable, because I will pay Mr. Jitu in future. So trade payable is a liability, that is future outflow. And we understand the concept, all outflows will have a credit balance. What goes out will always be a credit. So what is the amount of trade payable? It's 5,000. Students, you are getting or understanding the concept or not? If you understand the concept, if you do not understand the concept, I request you to reverse the video and see the whole lectures again. Read it or see it twice, so you will get a inbuilt or in-depth understanding of the concept. Now, what is rent and rates? What is rent and rates? So rent and rates are the expenses. Rent and rates are the expenses. Rent means when I take a room. For example, if I take a room on the rent, on the lease basis, I have to pay a rent expenses to the owner of the assets. That means all the rent and rates means taxes, are the expenses. And we knew that the nature of expenses is debit. So where should I write the amount of rent and rates? It should be on the debit side. What is the amount? It is 16,000. It is 16,000. Then comes the wages and salary. Again, sir, wages and salaries. We have to pay the wages to the laborers and salaries to the employee. It is a business expenses. It is a business expenses. It is a business expenses. So where should I write the expenses? Expenses will always having a debit balance. If you get confusion, just see the chart. So we need to understand the nature of transaction, the nature of account, and as per nature, we will write whether it is a debit or credit. Wages and salary is an expense, and all expenses and losses will be having a debit balance. So what is the debit balance of wages and salaries? It is 12,000. So we will write on the debit side 12,000. Students, are you understanding the concept? Then comes with the heating and lighting. So heating and lighting, it is also an business expenses. Heating and lighting, for example, if I can use this word in a layman's language, it is an electricity charges. Heating and lighting. In manufacturing industry, they also use the lights and the heat for the production of goods and services. So heating and lighting is also a business expenditure, and we all also know all expenses should have a debit balance. All expenses have a debit balance. So what is the balance of heating and lighting? It is 900. So we will write heating and lighting on the debit side. Student, do you get the understanding of the concept? Do you get the understanding of the concept? So students, the next point is Insurance. What is insurance? Insurance is taken by the business to cover its risk. For example, if I took the fire insurance, what risk I am covering? If any fire occurred in my office premises or in my factory, I will get the losses due to the fire. So I need to cover my risk by taking an insurance. For insurance, I need to pay the premium. Now understand, student, when I am taking an insurance for my business assets, for my stock, for my inventory, for my plant and machinery, I have to book an expenses into the business account. So this insurance is nothing but the insurance premium, pay for covering my risk. So insurance premium is also a expenses for the business, and expenses will always having a debit balance. So students, where should I write? So insurance is of 1800. Where should I write, debit or credit? It is an expense. So sir, it should be having a debit balance. How much? 1800. So it will always come under debit side. If I write, it is a premium. Insurance premium. It is an expense. It is an expense for the business. So cash is my asset, sir. It is under my control, and I will acquire the future economic benefits out of it, isn't it? Cash is nothing my current assets. Cash are my current assets, and assets will always be having a debit balance. So where should I write? Sir, it is having a debit balance, so you should write on the debit side. So what is the balance of cash? It's 1200. Now comes bank. Now students, understand about the bank. We already visited the bank. So if my money is deposited into the bank account, it is my money. Are you getting my point? If I deposit 10,000 rupees into my bank account, that bank account related to me, it is my assets. It is related to me, it is under my control. So the balance in the bank account, will always be my assets. But if I withdraw amount in excess of my deposits, for example, if I have 10,000 rupees in my balance, but I tell bank, Mr. Bank, if you can provide me a loan more than my deposits, for example, if I withdraw 12,000 rupees, so bank has been offering a facility. A bank has offering a facility to a businessman for withdrawing money more than its deposits, but it need to charge an interest. So if I withdraw excess money, it will be treated as bank overdraft. What is over? Excess. Draft means withdrawing. So when I withdraw amount more than my deposits in my bank account, it will be called as bank overdraft. Now understand, students, if my balance is 10,000 and my balance in the bank is 10,000 remaining, it will become my assets. But if I withdraw more than 10,000, then it will create a liability, the excessive withdrawal of amount. If I withdraw 12,000, then I have a liability of 2,000 to bank. I have to pay bank 2,000 because I withdraw excess. So if my bank having a deposits, if my bank account having a deposits and I withdraw less than my deposits, my bank will show the debit balance. In my books, in bank book, it will show credit. If I withdraw excess money than my deposits, my bank account will show the credit balance. Why credit balance, sir? Because you withdraw more than your deposits, and this facility is offered by bank itself. For excess withdrawal of money, bank also charges the interest. Do you understand my point? So you need to be carefully look at the transaction whether bank has a debit balance or bank has a credit balance. If bank has a debit balance, you will write down the debit side. If it is written that bank has a credit balance, you should never write on debit side, because the question itself says that the bank has a credit balance. That means you have taken or you have withdrawn in excess of your deposits. So then it becomes a liability. It will show on the credit side. But sir, what if nothing is given? What if nothing is given? So what shall we do then? Students, understand the general nature of assets is always of debit, but exceptionally if it is written that it is a credit nature, we will go to the credit side of the account. So we have already created or prepared the cash book, the bank balances. If bank balance debit side is more than credit side, then definitely I have a debit balance in the account. If I have 20,000 rupees in my bank account and if I withdraw only 5,000, then 15,000 is deposited into my bank account. It is my saving and my bank account will always show in my books debit side because I have a saving, I have a assets. But if I withdraw more than 20,000 rupees, for example, if I withdraw 30,000, then 10,000 my bank balance become nil and 10,000 in excess of my deposits. So I need to pay the bank as a amount excess withdrawal. So it will become my bank overdraft. Bank overdraft or bank credit balance will always come under credit side and bank generally has a debit balance. If nothing is given, you will always write the balance of bank on debit side, but if it is written bank has an overdraft or credit balance, you will show it under the credit side. Student, do you understand the concept? Okay, thank you. If you do not understand, please reverse the video and listen to my voice again. So it is written bank, nothing is given, sir. In this question, nothing is given. So bank has a 4,700. That means I have a deposited amount of rupees 4,700 in my bank account. Where should I written? Where should I written? Here. Sir, generally you should write under debit side. But what if it is written credit? Sir, don't write on debit side. Write on the credit side. If it is written overdraft, don't write on debit side, write it on credit side. Student, do you understand the concept? Thank you. Now comes the bank loan. Oh my God, it's a loan. Sir, it's not a bank deposit. It's not a bank deposit. It is a loan from bank. So loan is a liability. It is a debt for an entity which you need to repay. In many circumstances or situations, you will see that business are facing with the liquidity crunch. What is liquidity crunch? The cash crunch. Or the amount which we need to invest is more than our current assets, more than our current balance. So what we will do? We will go to bank. The role of bank is only to accept the deposit and to give loan to those who required it. So if I need a loan, I can go to bank and bank will provide me the loan. So this bank loan is not an asset, it's a liability for me because I have to pay that loan to the bank again along with the interest cost. So bank loan, so when I write bank loan, it is not a bank account balance, it is a loan acquired from the bank, and any loan or any debt is always having a liability and the nature of liability is a credit. Student, do you understand the concept? Again, listen to me carefully. It is not a bank balance, it is a bank loan. I have obtained a loan from the bank for which I need to repay the bank along with the interest. It is a payable. It is a payable future outflow of the resources. Bank loan will always show the credit balance in our books. That is liability. Are you getting my point? So bank loan we will write on the which side? Which side? It will come under credit side. What amount of the bank loan is? Bank loan is of 12,000. Bank loan is 12,000. So student, there are two important concepts we have understand. Bank can have a debit balance or having a credit balance. It depends. If nothing is given, the general rule is bank is our assets and it is a debit nature. But if it is given that it is a credit balance or overdraft, always write down it under the credit side. Do not confuse into the bank or bank loan. Bank is my saving, but bank loan is my debt. It's my liability. Do you understand this? Next, capital. We already understand capital is a liability for the business. We have understand the concept of separate entity in our previous classes. What is separate entity concept? Separate entity concept suggests that owner is different and business is different. So when owner deposited money into the business account, we have to make transaction from the point of view of the business. What entry will business pass? What recording of transaction will business pass? Bank account debit. Bank account debit. Who is the giver? Owner. So whatever a owner has invested into the business becomes the capital or the owner's equity. So bank account will be debited and capital account will be credited. Understand students, capital is an internal liability for the business because it is a owner's fund. So liability is of two nature, external liability and internal liability. When owner invested the funds into the business, it becomes an internal liability for the business because business has to prepay that part of capital account to the owner along with the profits. Are you getting my point? So think from the point of view of business. The first concept which we understand is separate business entity concept. Business entity concept which suggests that please separate your business from your personal existence. For example, if Mr. Jitu is there and I am here, so Mr. Mridul and Mr. Jitu has separate entity. Similarly, the business of Mr. Mridul and Mr. Mridul has a separate entity. Do you understand my point? So you need to record the transaction from the point of view of the business and not from the point of view of the owner. So the capital is always a liability, an internal liability for the businesses. Do you understand the concept better? Capital is always a liability for the business. So where should I write down the capital account? I should write the capital account into the credit side, and the amount of capital account is 33,000. So the capital will show under the credit side. Do you understand the point? And the last point we have arrived is the drawings account. So we just now we have understand drawings. What are the drawings? Drawings are the withdrawal of amount by the owner for personal use. We already written in the accounting concepts and we also understand this concept thoroughly. So if I invested money into the business, it will become my capital. But if I withdraw that same money for my personal use, it becomes the drawings. So if I invested the money into the business, it becomes my capital. If I withdraw same money for my personal use, for example, if I purchase a car for my personal use, it's not a business expense. It is not a business assets. It's my personal assets. So if I withdraw some money from the business for my personal use, it will become a drawings. So if I invested money into the business, it will create my capital. If I withdraw money for my personal use from the same capital, it becomes my drawing. So if capital is a credit nature, drawing will have a debit nature. Do you understand the concept? If capital is the investment of money, then drawing is the withdrawal of money. If capital is of credit nature, then drawing is always of a debit nature. What is the amount of debit? 6,000. So student, we have understand how we will classify all the accounts on the basis of the nature. First, we will classify the accounts on the basis of nature, whether it is of debit balance or whether it is of credit balance. We already prepared the chart related to the debit nature, the general account nature of the balances, the debit side and the credit sides. What you need to do is, you need to just go through the nature of accounts and understand whether it is a debit nature or a credit nature. Personal account can be a debit nature or can be a credit nature. If I purchase goods from Mr. Jitu is credited. Purchase account debit, Mr. Jitu account credit. Then Mr. Jitu will be my trade payables. It will be a credit balance. If I sold goods to Mr. Jitu account will be debited and sales account credited. That means Mr. Jitu will become my trade receivable. So personal account can be having a debit balance or credit balance depending whether it is a trade receivable or trade payable. Cash account will always having a debit balance, but bank may have a debit balance, may have a credit balance. If you have a deposited amount, if you have a saving into the account, it will become my assets. But if I withdraw more than the saving account, it will become my liability. Now we are coming to an end to this lecture. Total all debit side, total all credit side. If you total all debit side, student, I am giving you 2 minutes, just total it. Pause the video and total the debit side and total the credit side. Now student, I hope you have paused the video and you come the total of debit side and the total of credit side. You will amazed to know that the total of debit side will always match with the total of credit side. The debit side will always equals to credit side. This shows that our accounts are mathematically correct, because my total of debits will always match with my total of liability sides, total of credit side. My debit and my credit will always match. So this cleared the concept of double entry system, that every transaction has two sides, debit and credit side, and at the end of the transaction, at the end of the year, my total debits will always equals to my total credit. If I have to make an accounting equation, I can say that my total assets will always equals to my total capital plus total liability. Please write down this accounting equation in your copy. So this is the trial balance. Before starting of the accounting equation, this is the trial balance where your total debit will always equals to total credit. Now student, understand, matching of trial balance is just to check the mathematical accuracy. In next lecture, we will understand the limitation of trial balance. But before ending this lecture, I would like you to write the accounting equation. So student, you have understand the whole concept of trial balance. So now we will understand, we have derived an equation from the trial balance itself. We understand that debit will always equals to credit. We already know every assets have a debit balance. So all assets will have a debit balance, and the capital and liability together having a credit balance. So as per the principle of duality and as per trial balance we have done, we already come to know that debit is always equals to credit. So we can create an accounting equation that is assets will always equals to capital plus liability. I want every one of you to please write down equation, because we have a separate chapter to prove that accounting equation, isn't it? And if we can say, with the help of trial balance, we can also derive the accounting equation. So we can derive this accounting equation with the help of recording of transaction as well as with the help of trial balances. Okay. So thank you so much, student. It becomes a lovely session with you. Please go through this video carefully. If you do not understand any concept, please text us or rewind the video to understand this concept fully. Thank you so much. Asta Vasta. Thank you.